Trading is risky, and you might lose all of your money, which would suck. Or at least that's what's in the disclaimer section of everybody who's selling a financial product, warning you of the dangers of trading, that you may end up destitute on the side of the street begging for change. Now, is this something that you should worry about? I mean, how risky is trading really? I mean, everything has some sort of an inherited risk to it. So what do we talk about as traders when we mean risky? Because we often as people like to concern ourselves with unnecessary risk. You see something on the TV about a clown attacking someone, and you become afraid of clowns. And that becomes your main worry. The risk is clowns. Now, certainly that's something to be concerned about, but in truth, your chances of being attacked by a psycho clown is very small. Where a real risk would be the number one killer of people, which is heart disease, and that can be controlled from your diet. But hardly anybody ever worries about that when they're eating some hamburgers or French fries, do they? So again, a lot of this stuff, how we view risk and how we handle risk and what we consider as risky and not, a lot of this stuff is put into our heads and makes us think that way. So as traders, we have to be able to mitigate risk in order to stay in the business. So we're going to talk about the truth to this and what types of risk face traders. To make this easier, I'm going to break this down into two different types of categories, which is two different types of risks. You have what we call is a controllable, and then you have what is the uncontrollable. So you have two risks, the type that you can control and the type that you cannot control. And under the type that you control is the actual financial risk that you take. Now this might come to a surprise as a lot of people because you see people losing money. You always have somebody on social media saying, geez, I just lost $700,000 trading this stock. I just blew up my account. I just grenaded. You've heard me say I grenaded my account before several years ago. But in truth, each and every one of us as traders can control the amount of financial risk that we take through a trade. That is up to us. And doing that, there's a few different ways. One way that you can control your financial risk is through your position, which we have talked about before. Position sizes. Making sure that you are adequately and correctly sized for each trade. You want to make sure you're doing that. You can control your risk. You can control your risks by using stop losses and other types. Many of these we've already discussed in the past whiteboard lessons. So when it comes to financial risk, you, the trader, really can control that by using proper position sizes, not getting too aggressive and too heavy on trades, and really respecting your stop. So when you enter a trade, you judge the trade based on the type of setup that it is. You judge the type of risk that you're willing to take and match that against the reward, and you make the trade. Now, if you can stay disciplined in that, you should have no trouble, or you really shouldn't be a victim of blowing up your account in most cases. Now, certainly we'll get to uncontrollable risks in just a minute, but you do, as a trader, really have a lot of control over your financial risk. The second type, I'll put the one here, the second kind of risk is discretion. Okay? Now what I mean by discretion risk is one reason traders lose a lot of money, which is another topic again we've discussed before in past whiteboards, is revenge trading, anger trading, fear of missing out, all these emotions and psychological things that really hinder traders. And that is a discretion. That's a discretionary event. So you have the discretion over whether you decide to take a trade or not. This is a fine line for traders because there's a lot of times, for example, we've made reference to in the past. If you don't feel well, you're sick, you don't have to trade. No one is forcing you to take a trade. And that goes for every scenario. No one is making you trade a stock. So if the setup isn't exactly perfect, you don't have to take the trade. If you just lost a lot of money and you're angry and you're really emotional, the last thing you should do is trade because, again, we talked about this before, you will separate really good quality setups from bad ones and you'll end up revenge trading, really trying to get your money back. Adding position sizes, right? You guys have been through this before, we all have, we're no saints here. But you have a lot of discretion over whether you take a trade or not. And just because a setup is there sometimes There's certain things that happen in your life, and there's certain psychological moments that you have. There's certain times you shouldn't trade. There's certain times that cash is the very best position that you have. Now, there's certainly a lot of different controllable risks, and there's a lot of subcategories under each one of these. But for a trader, the main controllable risk that you can control is financial risk by proper position sizing, using stop losses and being disciplined on those stop losses, and then always having the right discretion, or I should also say the word discipline. Discipline ties in probably both of these, because with the right discretion, that keeps you from revenge trading, getting aggressive when you shouldn't be getting aggressive, getting angry, getting emotional, or trading when you really don't see top tier setups. So you are in control of that type of risk. Now, this is the stock market, and just like everything else, driving your car, there's a certain amount of risk you cannot control. You cannot control if a clown pulls out in front of you and kills you. That's the risk that you take. So there are certain things, of course, when you hear about stock market trading, that is risky. There are risks that you cannot control. And of course, the number one uncontrollable risk is the market itself. Because people trade the markets. The market is emotional itself. It's kind of like a diva. And it has behavioral issues. Right now, as I'm doing this, we just came out of an election, a very stressful election for the American people. And we've seen the market react in a very stressful way. We saw an incredible sell-off. We saw what was supposed to be an additional sell-off turn into a rally that's now almost close to all-time highs. Market risk is always there. There's always the event that something could happen that is out of your control. When the Fed speaks, this creates stress upon the market, which no trader, no matter how good they want to tell you, they don't have the answer, or they can't predict an outcome. So you have things like the Fed, you have rising interest rates, you have threats from other countries, you have things that come out sometimes when you're trading stocks, such as news events, halts, people dying from taking certain medications from a company. There are all of these outside factors that can happen at a split second. And then you're just a victim. You're just getting caught in the crosshairs. And I think all of us, after you've traded for long enough, you know what I'm talking about. We've all kind of been in a halt or crossed paths with a stock that you shorted it, and then instantly, 30 seconds later, it secretly gets bought out, or it gets halted or something like that. So there's that market risk that goes along with that. And the second one to that, to kind of build on not just the market, is overnight risk. This is why a lot of people, this is overnight. I just got so lazy, I couldn't even finish. I just can't even finish spelling it. This is why a lot of people choose to day trade over swing trading, because anytime that you hold a position overnight, you are a victim of the entire planet for who knows, 12, 16 hours. There could be a war that breaks out tonight. There could be a terrorist attack. There could be the things that bother the market, companies getting halted, CEOs getting arrested. Sure, these things are rare, but they do happen. Ask a lot of us who traded through 9/11, right? We go to work one day, market gets halted, and we're out of business for a week, and we don't know what's going on. Certainly that's an extreme measure, but if you intend to trade, and you trade for a long time, you will cross paths with some of these risks that you can't control. The thing about it when we look at risk, and again, there's subcategories, I can go on and on forever about the little different nuances and micro risks. But the point is to understand what risk itself is when you start to trade. Everything that you do in life has a certain element of risk. And there is some truth to the more risk that you take, the more reward that you will get. However, trading is not as scary and as dangerous and as risky as many people will make it out to believe. And when you see these things about people losing several hundreds of thousands of dollars, look, I was one of those back. If you've heard my story before, I lost several hundreds of thousands of dollars in 2001, 2002, before I really got things together. But when I look back at this, the risk that I take, or the reason that happened wasn't because of risk that I couldn't control. There was 9/11, but a lot of the damage to my account was already done from here, because I didn't respect my stop losses. I didn't have a plan. I traded really heavy sizes. I traded when I was angry. I was always trying to make something happen. I tried to force things. So most of the damage that happened to my account was by my own doing. So remember that when you take on the game of trading, if you're thinking risk is a problem, or you're worried about risk, understand that the biggest risk that will get in your way of successful trading will be you yourself. And we discussed this before. We've talked about this as well with psychology. It's all a psychology game. Remember, this stuff you can control. The majority of the outcome of every event you can control. Now, you can't control as to whether a trade will work or not. That's not up to you. You have to take the trade, you have to take the setup, and you can't control, quote unquote, what happens with that stock after it. But for the most part, you can control how much risk that you're willing to take on each trade. So anyway, hope that this whiteboard lesson helped you with a little bit of risk and understanding risk. As I always say with these, if you need any help with your trading, make sure you visit thelincolnlist.com. Take a free trial to our live trade room, CS Trade Live. As always, thanks for watching. Till next time, talk to you then.